Hello everyone, and thanks for tuning in to the Financial Investor channel. My name is Brent, and today we're going to be covering the stock market weekly recap for January 2nd through the 5th. This is my second time recording and the very first time with my microphone actually working. So what we're going to be covering in today's video is we're going to go over three interesting articles that I caught my eye this week. I believe I posted them to my Facebook website. We're going to be talking about in my upcoming video that's being released on Monday. It's already queued. I posted a picture of it on my Facebook site, talking a little bit about the three indexes, how they did for the week, going and taking a look at my dividend payouts, my trades that I made this week, and then talking about 5 stocks I was tracking this week. One of them, it was in my January watch and buys, and one of them that's currently in my portfolio that had some bad news come out about it, the chipsets, some of the cash potentials, the way it works, which drove the stock down quite a bit. So let's go ahead and get into it. First of all, I want to thank you guys out there. Very first week of 2018, I'm up over 21 subscribers. I remember looking at my subscriber count, and it was 300 on January 1st, and I was like, man, that is great. I have 2 more months to hit my 500 subscriber goal, so we're well on our path to 500 subscribers by March 1st. That is the 8-month mark, and that's my current goal. So let's go ahead. Thank you guys out there again. If you are brand new to my channel, if you are a reoccurring viewer, hit the subscribe button. I really appreciate it. It really helps me out. If you do like the video, hit the like button below, and let's go ahead and jump into this. So this was one that caught my eye this week. Goldman Sachs predicts that the bull market will be unstoppable in 2018. It has been a while since we've had any sort of pullback greater than a 5% dip. We've had a lot of 3% dips during 2017, but it has been some time since we've had that 5% dip. And with a lot of new investors in the market, a 5% dip could cause a lot of new investors to pull out, which could cause a bit of a panic sell. But we'll go ahead and get more into the article here. And what Goldman Sachs analysts predicted was that there should be a gain of between 7 to 9% return this year, with the main index, which rose 19% back in 2017. It then goes on to talk a little bit about the previous bull markets and how they kind of dwindled down and where they had lagging points. And then a couple other predictions down here. The earning growth for the index is predicted to reach 12% in 2018 and 10% in 2019. So who knows when this bull market will get, punched in the face. The next article that came across was Amazon will buy Target in 2018. This is all prediction. It was not actual factual news. Amazon didn't predict, Amazon didn't disclose anything. Target didn't disclose anything. This is just someone mentioning they predicted that Amazon will buy Target. And then that day, Target rose by 3.7%. Amazon rose by, I believe, a couple percentage, not percentage, like whole percent. They rose by like 0.56%. So Amazon may make a bigger push into a physical store this year. And with Target and Amazon, I can kind of see that they bought Whole Foods. Whole Foods isn't exactly your typical Sherman Williams or your Kroger's and such. So I could see maybe Target, but I talked with a couple other investors in some of the Facebook groups, and they had said that if anybody would get bought out by Amazon, it may end up being Kohl's, and that was one of their predictions. And I could see Target or Kohl's being one of those companies that would be targeted as a brick and mortar store, like a physical store. But I think Target would be a better option for Amazon, just because Target is so focused on getting moms and women into the stores. They make the stores look very nice and tiled and prettied, and the color red and such. So we'll see. The third article caught my eye was Pakistan cozies up to China on trade after Trump tweet. North Korea, Kim Jong-un and President Trump, they all had a bit of a Twitter discussion talking about missiles and buttons and who has the bigger one. And Pakistan decided to drop the U.S. dollar in exchange to adopt the China's yuan as a currency for trade. So that just means that they're no longer having to pay any conversion costs any fees associated with converting their currency over to the U.S. currency over to the China's yuan when doing any sort of trades. There's been a couple other countries that have done this as the U.S. dollar is beginning to fall a little bit behind, as people are starting to begin looking at crypto as a means of the future. Who really knows exactly what will happen with the US dollar, the fiat dollar? I'm sure it'll always, in one way or another, be around. But, plastic was such a thing, Visa checks to Visa to crypto now. So who knows where it's all going to end up in the next 5, 10, 15 years. That's a great prediction. And over on my Facebook website, I talked a little bit about, I had looked at Redcoin as a cryptocurrency. I have my little links here about the Redcoin actual website. You can't mine Redcoin anymore. You can do like a proof of stake. So as long as you have your wallet open and you have Redcoin, it's kind of like a social media cryptocurrency where just by having your wallet open you're able to mine it by doing proof of stake, and it kind of talks about what's Redcoin and such. So I thought that was kind of interesting. I posted my wallet there. I updated it last night, and I had taken a look to buy maybe some Redcoin. I like Litecoin and Ethereum and XRP, so that's I can't think of it right now, Ripple. So I thought that was kind of fun. So could you do it for Monday? So I'm going to be talking about the #1 investment app for 2018. It offers commission-free trades, no fees whatsoever, 100% free. It offers partial shares, which I think is amazing for brand new investors. Now you can go ahead and get into the market with 25, 35, 50, 100. You can go in with $16.60. Doesn't matter because you can own partial shares. They also offer self-managed retirement accounts. You can open up your own IRA, your own individual retirement account, or your Roth IRA. So I already made a video on the sign up process. That's coming out Monday. They do offer, I signed this up for my wife. I'm going to be depositing some funds in there. So I'm going to be making some videos on that. Basically, I'm going to have her create a Roth IRA. That way, any dividends, gains are able to be reinvested 100% free back into their commission-free app, which will then allow her to reinvest those dividends. Even if she only gets 50 cents, $1, $2.50, she can't buy a whole share, but she can buy partial shares on this app, and it gets auto rebalanced when adding any sort of amount. So if you have 50 cents to add to the portfolio, it rebalances. If you have $2, $5, $10, $100, it all goes in. So that video is coming out on Monday. Now, talking a little bit about the indexes, we had, last week of the year on Friday, all indexes were down by almost 0.5%. This week they all rebounded. We can see the 5-day change up 2.6% for the S&P 500, Dow Jones up 2.33%. The Nasdaq is the winner this week, up at 3.38% this week. So an amazing week for the indexes. I have to cough here. 1 second. Okay, and I'm back. So yeah, going kind of over the indexes and kind of going back over to Goldman Sachs prediction. Their analysts predicted between a 7 to 9%. The three indexes are up over 2.25%. That's a quarter of the prediction already knocked off. So going into the next 2 weeks, 3 weeks, 4 weeks, I could maybe see some sort of a pullback of maybe 1.5% to 2% on some of the exchanges, but it really depends on the market. So let's go ahead and continue here. So over to my article now that I released earlier today. Essentially just talk about the market indexes, which we've already covered, so we can skip over that. I got juked out this week. I only made 0.49% of my portfolio this week. That's because Intel and a few other stocks just kept kicking me down this week. So Tuesday, Wednesday, I had negative days. Thursday, I broke even at 0%. And Friday is where I made the majority of my return for this week. So I was only up 0.49% this week, which not a great start in comparison to the other indexes. The weekly trades, weekly dividends this week, I got paid out by ADP, Automatic Data. I got paid out $20.79. Inside my retirement account, I was paid out by a couple swing trades that I had done prior. I got paid out $1.32 by Cato, $7.96 by Scanicorp, and 50 cents by UGI. So total for the year, total for the week, I made $30.57. So that's a great start to the new year. I made over $30 in dividends, some of it inside my Roth IRA, which does not go against my contributions for 2018, which I'm still planning on making. I'm just working on my wife's account right now to kind of get that all set up, and then I'll be able to add some money into my Roth IRA. The trades that I made this week, I bought one share of Hormel Foods with the dividends that I was paid out this week inside my non-retirement account by ADP. Plus, I had some money sitting in there still from the earlier weeks in 2017. I bought one share of Hormel Foods at $35.85. Their ex-dividend date is coming up on the 11th of January, and they pay out 18 cents per share. I'm still continuing to hold OMC going into 2018. Their ex-dividend was back on the 18th of December. I don't know how I will go in the future. Swing trading was fine and dandy and all, but I posted it somewhere. I don't believe that I'll be doing a lot of swing trading. I tried it for a month. I tried it out, and I don't like it because I don't like buying into a stock that I did very little research, and I'm buying it just to kind of do the ex-dividend and then kind of selling off the stock. That's not the type of investor that I am. I like to buy and hold the stock, even if it is trading inside my Roth IRA where I can sell it off and not have to worry about paying any taxes on it. It's just much better to do a full scrub of the stock and know that you're going in and buying a great stock, and that even during a downturn you don't mind having capital in that. Whereas in this position, OMC itself is not bad. They've been paying dividends for 7 years. They're not recession resistant, but they have consistent dividends. I don't see them going anywhere in the future. But as far as being able to rebound after dividend payouts, most of the other dividend stocks that I'm currently tracking and have actually done quite a bit of research, they have all done well. And I don't know if I will be doing too many swing trades going into the future, but I will be continuing to post my trades on my website every week on Saturday and then making a video on it. So that is basically it as far as trades and dividends for the week. Now, going into some stocks that I was tracking this week, we have Boeing Company. This is one I talked a little bit about on Stash. If I was going to start a Stash portfolio, I would probably go more towards like a defensive build, because I don't have a lot of defense industrial stocks inside of my portfolio. I think that Boeing is a really great stock. It's been paying dividends for a long time. I had looked into this quite a bit in the past, and I had really considered adding it to my portfolio. It is a bit overpriced, I believe, at this current time frame. You can see just alone this week it went up 4.72%, and this is all Friday. I don't know why this is showing 0.08% loss. This stock, let's go over to Google. I don't trust Bing, so Boeing, that's not it. Let's see, what's the ticker? Yeah, it's BA. Of course I can't type it, so BA stock. Unless they trended downwards after the market closed. Now they trended, the market closed, they did fall down 2% or 1.5%, but then they trended back up and ended positive after hours. So CNN's charts are a little bit off here, but Boeing is a great stock. I had looked into it as a defensive position in my portfolio. Dow DuPont is another great stock that went up very nice this week. Had an increase of 5.9% this week. So that's an amazing start to 2017. This is not one that had, it's been paying out. This is a great one for dividend growth investors. This one's been paying out dividends, I believe, around 54 years. When I had looked into this, I have a whole list of a bunch of these dividend aristocrat stocks that I had gone through and kind of scrubbed through to see which ones have been paying out dividends, which ones have like earnings growth in the next 5 years, like are expected to have earnings growth, but could be potentially down in the current market right now. So that's just some of the information, some of the boy, these charts are not working. You can see here, for the most part, during the last year, they were kind of going up and down. This last point right here, you can see they spiked up quite a bit, going up for maybe around $70 as their average to over 75, yeah, $75.42 right now. IBM, this was on my January stocks to watch or buy. Mainly because they're trying to come out with a bunch of new technology. I don't know specifically where they're trying to aim right now. The their totem stick, their water stick, where exactly they're trying to aim. IBM is such a huge business. I do have to go and take a look at their 10K, their 10Q, read through them, and take a look where they're making their profits. What kind of ideas do they have kind of coming up? I thought they were going into the drone business. It's a very small piece right now, but I'm trying to see where do they get a lot of their money at right now. They've come up, I talk a little bit about the as far as like blockchain technology, and this is one that I will be continuing to watch. I believe that they are at a disadvantage right now. Like, it's not disadvantage, but if we were to go and take a look at their 1-year charts for just IBM here, I believe for the year they're, what is going on here? Oh, price and dividend yield. Yeah, right now, yeah, they had a point right here where their price for the year had swung down to bottoming out point. They hit their very end. September timeframe would have been the optimal time to buy, because you would have got the stock in the $130 range and it had a yield of 4.10% or higher. That would have been optimal. You can see with the yield greatly outweighing the price. And right up until this point now, the stock was at a great position to buy. I think the price to book ratio was a little bit high. This was on one of my, I covered all this information on my 4 or 5 stocks to watch in January in 2018. The next stock, I was actually really surprised on this one. I wasn't expecting General Electric to rebound this quickly, but you can see here Friday, Tuesday, Wednesday, Thursday, huge leaps forward, 5-day change up 6.25%. I was actually considering, there's a lot of talk on this one on the Facebook groups that I'm in. Everyone, every single day, hey, what do you guys think of General Electric? Do you think General Electric's a buy? Everybody's always comparing it to the old Yeller. You take it out in the backyard and you let it go. But this one is having some momentum, kind of building up. If we take a look over here at Market Pro, we type in GE. I just want to take a look at how their buys look for the week. Here we can see like a massive sell-off here of in the 918,000. The volume. So their volume has been pretty spiky as far as selling goes. So I'm not sure why there would be a huge sell-off and then the price would go up. But that's kind of just interesting there. The next stock is Intel. Now this one had some news that went off. I know I read the article on Thursday, but this was a bug that was known for like a week by my friends. Man, my throat. I was actually surprised that I didn't hear about it until Thursday when they released, like, they sent an email around the around my department, and they were talking about how all the chipsets for the AMD, the Intel, man, my throat. It's just there's a bug, there's a vulnerability. I can't log into my email right now, but to get that specific article, but they were talking about how the Intel chips, the AMD chips, they all have some sort of a vulnerability where it uses like the cache mode to, there's like a read and write there that's normally able to just be read. I don't know. I'm not going to go into the whole thing. I didn't get it. So that caused their stock to really fall this week, but they are beginning to rebound. I thought this was a great opportunity to buy. I don't have any money right now that's in my account to really put towards anything. Intel is one of those stocks I do need to build the equity back up, or I do need to build my equity in, just because I never completely filled out my equity in this stock. So we can see Intel right here. My equity in it is only $1,200. And most of my equity, I like to have it sit right around $3,500 to $4,000, just so it's kind of like a balance in a way. But the reason I hadn't been putting more money into Intel is because it's up 30% of my portfolio. Now, this wouldn't be averaging down or averaging up or averaging down. I wouldn't be averaging down my initial cost. I would be averaging up. So I'm not looking into doing that anytime soon. Who knows? I may add some through an ETF or something. Let's see here. And that is basically it. So those are the three articles. Goldman Sachs predictions, Amazon predicted to buy Target, predicted Pakistan dropping the dollar in order to use the yuan between China and Pakistan. Monday, look out for that video to watch. And if you guys are interested in cryptocurrencies, I don't really make videos on cryptocurrencies. I think that's there's so many channels out there making videos on cryptocurrencies, and everyone has their own opinion of cryptocurrency and what cryptocurrency is going to be the best. So I hear about it enough at work. I don't want to hear it about or talk about it at home. So S&P 500, all the indexes, the stock market, and the 5 stock: Boeing, Dow, DuPont, IBM, General Electric, and Intel. So that is it for this video. I'm sorry my voice has been terrible. I will try and get better in the next following weeks. So if you did enjoy the video, hit the like button below. If you are brand new to my channel or a reoccurring viewer, hit the subscribe button on the bottom right hand side. I'd really appreciate it. It really helps out my channel, and I will pat you on the back one of these days, sending a virtual pat. So if you have any questions about anything that was covered in this video, go ahead and leave a comment below. I will always reply back to you guys. If you guys have any questions about anything you'd like to have covered, go ahead and leave it in the comments below. I have a whole notepad inside my Google Sheets of comments or posts that I've run across that people are asking. I try and focus my videos towards answering those on days that I don't normally have something scheduled. So I always schedule something for Saturday, Monday, Wednesday. Those are my main 3 scheduling days. I have my educational or clip that comes out on Monday. Wednesday I have my 5 stocks. Saturday I have my recap, and then I have my 3 or 4 stocks I'm watching in the following month or in the following year. I have my weekly or my monthly recaps, and those are kind of the 5 ones that I do right now. And then I also toss in some other videos in between talking about Stash, M1 Finance, Acorns, and a couple other investment apps, or just articles in general. So that is it for this video. Not to make it too long and over 23 minutes, which we're coming on. So I will talk to you guys later. Have a great day. Bye bye.